mynews.studio.
In 2025, China's clean energy sector expanded rapidly. Renewables actually generated more electricity than fossil fuels for the first time. Do you think the rest of the world can keep up with that pace?
That's a vivid shift. And it's not just about environmental impact anymore, is it? Clean energy and electric vehicles accounted for over a third of China's economic growth last year. 15.4 trillion won. That figure is roughly equivalent to Brazil's entire GDP.
Yes, exactly. Just to ground us, today is 2026-0301, and these numbers are significant. In 2025, China added 430 gigawatts of wind and solar capacity. That's over half of all global renewable additions. By the middle of 2025, renewables were supplying nearly 40% of China's electricity. Solar alone grew faster than the overall rise in electricity demand.
So, clean power wasn't just matching demand growth, it actually overtook it?
That's right. In 2024, clean energy growth met 84% of new electricity demand. By the first half of 2025, it even went beyond demand growth. Then, in February 2026, clean energy capacity reached 52%. For the first time, clean sources produced more electricity than fossil fuels.
But how did China physically accomplish this? Setting targets is one thing, but delivering on this scale requires serious infrastructure.
It took a huge commitment to infrastructure. By the end of 2024, China had built 12.82 million EV charging points, creating the world's largest charging network. Total installed renewable capacity topped 1,600 gigawatts by August 2025, finally surpassing fossil fuel capacity. Achieving this also meant rapid upgrades to the grid and charging networks, something that remains a challenge in many other countries.
And this transformation isn't confined to electricity production. The electric vehicle market hit a new threshold. In 2025, more than half of new cars sold in China were electric. By June, EVs accounted for 53% of all new cars sold, and battery-only vehicles made up about a third.
That shift from niche to mainstream happened quickly. For context, Norway reached a 50% EV market share in 2020 and 90% by 2024. China seems to be following a similar path, possibly even faster, given the scale involved.
Who's leading this push? Companies like BYD and CATL come to mind.
They are absolutely at the forefront. In 2024, China produced about 12 million out of the world's 17 million electric vehicles. That's over 70% of global output. Of these, 1.25 million were exported. BYD alone delivered 4.27 million vehicles, capturing a 34% market share. Their strength lies in vertical integration. They manufacture both cars and batteries. Their blade battery technology is becoming a new benchmark for safety and cost efficiency.
Let's talk economics. This is about more than just policy, right? The clean technology sector doubled in value over 3 years. It's now comparable to the world's 8th largest economy.
Absolutely, and it's not purely driven by subsidies. Market demand and technological advances play a major role, but policy still shapes the landscape. In 2025, China moved from supply-side incentives to demand-side obligations. Now there are mandatory minimum renewable energy targets for power consumers, especially heavy industry. This is pushing sectors like steel and aluminum to decarbonize.
And they're aiming to launch a national electricity spot market by 2030, right? That's meant to connect diverse renewable sources and keep the grid balanced as renewables become dominant.
Exactly, and that's critical. The emissions picture has shifted as well. China passed its peak emissions in 2024, 6 years ahead of schedule. Even with rising electricity use, CO2 emissions fell by 1% in the first half of 2025.
So for the first time, economic growth and emissions growth have separated in China. Do you think that's sustainable?
Climate Action Tracker outlines 2 scenarios. In the best case, emissions peak at 15.1 gigatons in 2025 and then decline, driven by more than 400 gigawatts of new wind and solar capacity each year. Even in a slower scenario, Emissions stabilize rather than rise.
But globally, China now controls over 60% of lithium refining, even though its own reserves aren't that large. That gives it a strong position across the battery supply chain.
Right. CATL and BYD plan to expand battery production capacity to more than 800 gigawatts and 670 gigawatts respectively by 2030. That level of scale is difficult for others to match.
Chinese EV makers could account for 40 to 50% of the global market by 2030. That's a major challenge for Western car makers. Can any other region catch up in terms of cost or scale?
It will be difficult. China's combination of manufacturing, integrated supply chains, and new technology is tough to emulate. But there are risks. Overcapacity in the EV sector is an issue. The number of manufacturers has fallen from over 500 to about 100. Geopolitical tensions and trade restrictions, especially with the United States, are forcing Chinese firms to seek new markets. Domestically, coal oversupply and uneven EV access between rural and urban areas could slow progress.
Still, what China is doing looks like a template. Renewables aren't just about meeting environmental goals anymore. They've become a real driver of economic growth. The coordinated approach, generation, transmission, demand, and storage, could be a model for other countries.
That's the core message. In 2025, China demonstrated that clean energy can fuel economic growth, not just reduce emissions. Renewables now outpace fossil fuels, and EVs are mainstream. The question isn't whether this transition is possible. China has shown that it is. Now it's about whether others can match the speed, scale, and coordination.
That really is the story. A transformation that's reshaping the global landscape, with big consequences for industry, technology, and climate.
Thanks for joining us as we unpacked China's clean tech surge and its global impact.
Thank you for listening. This episode was brought to you by mynews.studio. You can try it now for free.